Welcome. This is Bert Dohmen with another chart guru chart where I will explain to you some important strategies in a market. You often hear that buy and hold forever is the way to go in the markets. Well, that's a false story propagated by Wall Street because they don't want the public selling near a top to interfere with their own selling. So let's take a look at what would have happened in the S&P 500 if you would have been able to buy the index at certain times and sell it at major inflection points when we gave the signal to sell in our Wellington letter as well as our services for traders. And here you can see a buy in January 1995. You would have caught the big up move right into the top of March 10th, 2000, when we gave a sell signal and said, when the Federal Reserve pursues this type of policy, it always ends in a market crash. And we did have that market crash. At the bottom here, we gave a buy signal. Then here on October 13th, this was 2 days from the actual top in the Dow Industrials of that big bull market. And we gave a sell signal. And then the market plunged. As you know, we made a lot of money during this decline for our subscribers if they followed our advice to buy the inverse ETFs. On the exact day of the low, March 6th, we said close out short positions, which means buying. And then 3 days later, on March 9th, we said this up move will be stronger and last longer than even the bulls expect. And it actually lasted even much longer than we had expected. But we don't try to predict in the future when the top will arrive. We just try to recognize it. Trying to predict the future is useless exercise. You can't do it, but you can identify it when it occurs. That is much more productive for us, at least. Maybe some people think that they can look into the future. We can't. We have a crystal ball, but it doesn't have an on switch. So that's it. The next table will tell you what the difference in performance would have been. Here you can see the important numbers of the performance. If you have bought the S&P 500 and held it without selling or rebuying sometime during that 18 years, you would have had a total return of 19% total. So that's a little bit more than 1% per year over that time period. Not very good. You could have done better in U.S. Treasury bills. But if you had just done 5 trades, that means the original purchase in 1995 and then 2003 buys, you would have accumulated a gain of 728%. Certainly a lot better than the buy and hold approach. This is why we say timing is everything, which is what we do using advanced technical analysis. Be sure to visit our website, which is domencapital.com, and you can get information on our different services, some for long-term investors, some for short-term traders. Thank you very much for being with us today.